Hey, everybody, welcome back to another episode. Today, I've got Mark Ritter on the show. Mark is the CEO of Member Business Financial Services. I know that's a mouthful, but it is a business lending CUSO. CUSO means the business entity is owned and operated by credit unions, and they primarily serve credit unions or members of the CUSO. Day to day, Mark oversees the strategy implemented by credit unions who are assisting their members with business needs, as well as consults with credit unions on the processes of delivering their services to their members. Basically, Mark loves helping members gain financing they need for their business and real estate investing needs through credit unions. And if you're like me and you're listening right now and you've not done a real estate deal or you've not accessed credit for your business using a credit union, you're going to want to listen to this episode as I'm kind of new to this and I'm excited to jump in here with Mark. Mark, welcome to the episode. It's great to have you on.
Brandon, thanks for having me, and I'll make your life simpler. You can just call our company MBFS, and the term CUSO, which stands for Credit Union Service Organization, instead of CUSO. So there you go.
Yeah, we were talking a little bit before we hopped on that your company is primarily made up of 13 credit unions and you guys service a pretty broad market. 85% of your business is doing like real estate loans all the way from kind of sounds like smaller residential deals, sounds like all the way up to like bigger commercial deals. And you guys also have uh products out there for business owners who are looking for funding for their business. And so I'm excited to jump into this because for me, I I've always used, local banks or private financing. I've never worked with credit unions before. I've never worked with like the big old banks like JP Morgan. And so it sounds like there's some stuff that I'm going to learn on today's episode and I'm kind of like an ideal client. So this is going to be a lot of fun. Before we jump in, can you give the audience some context on you, your background, and really just share your story on how you got into doing what you're doing today?
Yeah, absolutely. I am a native of the coal region of Northeast Pennsylvania, and after went to college at Penn State, so I'm much more of a Big Ten fan over the SEC teams, and I keep rooting for them. So, but afterwards, there wasn't too many opportunities in those days in the coal region for a college graduate. So I went down to Nashville, basically just with my car, and because I like country music in the area, and that's where I got into banking, working with some different support companies and places down there, and was doing pretty well. And the company that I was working for moved me back up to Pennsylvania to work with all clients in the Northeast, and basically because I was the only one from the northeastern states and could actually understand and talk to the people from up there at the time. So, so yeah, they said go back up and be our guy up in the Northeast. And over time, I was looking for different opportunities. I got into community. I really enjoyed community banking, and at the time stumbled across credit unions. And 20 plus years ago, I kind of knew credit unions existed, like many people, but that's when the laws started to change that they could get into commercial lending. And that's one of the biggest reasons why a lot of people don't know about us, is because, historically, credit unions were not an option. So I started up at a large credit union a little over 20 years ago, and basically it was the Wild West at the time. They just sort of threw me at a desk and said, we want to do commercial lending, figure it out. So I was there for 10 years, and was getting that itch for my next challenge in life. And there was a company a few hours east of where I was at, MBFS. And the easiest way to think about us and who we are and what we do, think about any place financial institution you deal with.
Mm.
The They have a loan officer, they have a credit person, they have all the software and systems and the whole back office operations and the people. Well, what the credit unions have done is form companies to of all the back office and systems and talent and lenders and share all of that together and share the overhead to offer these types of loans to their memberships because it's a lot easier to collaborate on doing it than everybody building their own shop and system. So, about over 11 years ago, that's when I took on the challenge of, building MBFS. And today, as I speak to you, as you mentioned, we're owned by 13 credit unions, but we work with over 100 credit unions nationwide. And all we do is it's small business lending and real estate investment lending. And we work with the smallest. Maybe you have a job and you're just starting out on your investment real estate adventure, or you're starting out with that small business, up to 10+ million-dollar deals. Our biggest one, I think, right now in the books is 28 million. So
Wow, so extensive background there. It sounds like you kind of just happenstance got into the whole credit union thing. And I drive down the street every single day and I see them, and they look like banks, but I've heard like they're not banks. So let's kind of first get to what a credit union actually is. What's the difference between let's say, you've got your larger banks like Regions and Wells Fargo, JP Morgan, and then you've got your smaller local banks. We do some stuff with First Bank, Studio Bank, First National Bank, and then you've got credit unions. What's the difference between those three?
yeah, and that's the reason why I like to come on shows like yours to kind of educate the audience. And it's crazy to think that over 125 million Americans belong to at least one credit union.
Like one in three.
Yes. And where is it better to get your loans and relationships than where you have an account and they know who you are? But when really, I'll get back. What really, when you drive past a credit union, they have a drive-through lane, they have an ATM, they have a sign up that says, "Come get a loan from us." Get your checking account here. And I hate to say it, but money's a commodity, and where a lot of us are selling the same stuff. But really, what the difference is when you look under the covers from a corporate structure. What a credit union is, it's a not-for-profit cooperative financial institution. So the owners are the members. There are no shareholders of a credit union. It is really run by the members. There's a board of directors. There's a board of directors that's elected by the membership who's oversees the organization. And then they hire the executive team to run the organization. And that is one of the main differences. And the profits that are derived from the organization, because we are a financial institution, can't lose money. The government tends to knock on your door when you do that. They return that back by having lower fees generally and charging people, fair rates on their loans, but also tends to pay a little bit more on deposits. So really that's one of that main differences. It's a not-for-profit cooperative. So there's not a lot of, I hate to say it, money to be made on being a part of a credit union other than you get a good deal. But it's not like your local bankers who are kind of I'm going to start up my bank, build it, and cash out. The credit union is there for the members. There's about 4,800 credit unions today in the United States. And there are some large institutions, but most of them, I would say, have the profile of kind of a community bank.
Mhm. So some of the advantages and disadvantages of working with like a credit union. So it sounds like it's a nonprofit, like kind of bank almost, like banking,
Yeah.
nonprofit. It's ran, owned, and operated by its members. Like, what are some of the advantages of, and maybe some disadvantages too, of working with a local credit union versus, let's say like a local bank, or
Yeah.
maybe like one of these bigger national banks?
Yeah, I'll say, you know, if you want a deal and you give your financials to a bank in the in a credit union, I hate to say it, but we're all asking for a lot of the same information.
Okay.
At the end of the day, it's a not-for-profit cooperative, but it's not a charity where I just give people money and hope they pay it.
Yeah.
So, so we ask for a lot of the same information, and the deal has to make sense financially, because the deposits are insured by the same federal government that insures commercial banks. So your money is safe and sound and protected. But when it comes to advantages, there's two in today's marketplace that I really think about. And the first one is that a federal credit union on any loan that it makes cannot charge a prepayment penalty at all, which is an often overlooked advantage for your transaction. Now, a couple years ago, when loans were being dished out at 3.5%, that wasn't a big deal because people knew that they're probably not going to pay this. They're not going to go out and refinance this transaction. In today's world, we have a tremendous advantage because our loan gives you the flexibility to refinance and restructure as the market changes. The other advantage that I'm really proud of credit unions is that being that we're a cooperative for members, we're not as we're not lending out of a box like maybe some of the big banks, or it's much more of community where we want to have that conversation and understand you, who you are as a person, who you are as a business, and can structure a deal that makes sense for you, but also where you're going in the future. Where, there's nothing worse than giving people it goes to, far off decision center and it comes back yes or no. And if you're the type of person that you're an easy yes, you're going to get an easy yes from us, and if you're, in the I'll say the bottom 10% of those credits, that's an easy no, you're probably going to get a no from us. But most people fall in between. And it's really, it's that story lending that we like to talk and have a conversation with people rather than just a transaction.
When you say talk and have a story with people, tell me more about that.
Yeah, and a lot of times, especially in when you're early in your journey,
Hmm.
maybe you have a full-time job and you're buying those first few properties, or you're starting that small business. It's easy to just stereotype you and say we do this, we don't do that. But especially for people who are members of a credit union, we really like to sit and talk with people to say, what are your hopes? What are your dreams? Tell me about your total relationship. Let's talk about your personal banking. Let's talk about your business. What can we do to help you out? And the other piece is if it's not perfect, we want to at least understand what's going on in the past. How can we, what and what's going on in the future? Did you have a bump in the road in April 2020 because you own a restaurant and it got shut down,
Mm.
and it's fine now, where those financials are a little ugly, so we can understand those differences and variations in your financials and in the business, and what you're wanting to do with this particular business or particular property.
Okay, makes sense. You're drilling down and really, rather than just sending financials to like a bank, like, hey, here's my tax returns and here's my personal financial statements, and they're just looking at that data and kind of making a decision. You guys are drilling in and be like, okay, well, if something doesn't look good here, maybe there's a smudge on the record. Why is that? And if we can justify reasons why that smudge is there, COVID or whatever, we can kind of remove that smudge and go, okay, we're not gonna look at that in the grand scheme of things. We're going to look at everything else. So you guys are a little bit more hands-on in the underwriting process. Am I understanding that right?
Yeah, yeah, and especially that first loan or two. If you're just wanting us to grab your financials, put it through a machine, and spit out an answer, you know, yeah, that's fine. We can give you that, but that's not really what we're looking to do. Credit unions, they're in their communities, they're part of their communities for a reason, because the deposits that we're getting local deposits, and we're lending them out locally.
Mhm.
So if you look at a credit union's balance sheet, for every dollar of deposits they're holding, they'll lend out about 85 to 88 cents in loans. So they're really the stewards community's money, of the community's money who's putting out locally. If anybody on, Christmas Eve, if you watch the movie, It's a Wonderful Life, it's kind of the same thing. They're George Bailey sitting there lending, taking the money locally and lending it out to homes. We're kind of a similar concept.
So is it different where they don't utilize like a fractional reserve banking system where the banks are allowed to lend, like $9 for every $1 that they have on the books?
Yeah, it's nowhere near that. Credit unions do
Got it.
have sources of borrowing, but it's really, we're lending out deposits as opposed to borrowing those funds and pushing them out on a multiple many times more than the deposits.
Okay. So let's see, there's two topics I want to get into here that I know the audience is going to be interested in. One is obtaining financing for their business needs, and two is, obtaining financing for real estate. So let's talk about the business needs first. Let's say I'm a business owner, and I've got a business that's had my ups and downs, right? I've been through the COVIDs, I've been through, the '08 crash or whatever have you. What does a credit union want to see in order to, provide like a line of credit for business operations, et cetera? And I guess it could be for anything that business needs, purchasing product, having a little cash flow issue. How does that work with you guys? What do y'all want to see?
Yeah, and the more important aspect to me is always understanding who that business owner is and the journey they're on, the phase of life that they're on. Somebody who's in their mid to late 20s is probably on a little different business trajectory than the business that's been around for 20 years, or you're closer to the retirement. So we want to understand you personally and your personal financials and goals, and really what are your hopes and dreams with this business? What are you looking to get out of it? But more importantly, do you know how to manage this business? Tell me about your experience and your background and how you're doing that, because that's really where we see often things go awry. Is, many times when you're a business owner, especially starting out, you're working for free. So do you understand that? Do you have to have the same salary as you had as a W-2 employee? That might not be realistic. Do you have the skills to do this? I am the least handy person of anybody listening to this podcast right now. If I opened up a home improvement business, it will be a disaster. And my wife would gladly tell you that. So we really want to make sure that you're a good business owner and you understand your business. And then we want to see the financials to go along with that. But more importantly, when you're a business owner, many times we see people grow their business faster than their money. And that's sometimes a death sentence for the business. So we want to make sure that you're a finance business, well capitalized. And there's nothing worse for us than underfunding a business. And we lend money. You think it's the other way, but many times if you don't have that funding, if you don't have the capacity to finance that business, that really puts both of us in a bind.
Hmm. When you say you don't have the money, you talking about from you guys or just
Just
personal
just
funds for the liquidity that the business has?
a combination of the both. If you're growing your business at 20% a year and you're a fast growing business and you need inventory, and I say I can give you a $50,000 line of credit, well, that you're going to max that out, be in debt, and be in a worse financial shape because you're not going to be able to pay your bills, you're not going to grow, you're not going to be able to have the employees. So we want to make sure we're properly financing you. And sometimes it's better to have a little bit more of a cushion with regards to liquidity sources than to be underfunded.
Mhm. Makes sense. Okay. So you're looking at liquidity on hand, what the real needs of the
Yep.
business are. So you're understanding the business strategy. Where are you trying to take it? Okay. What do you really need here? Is it really a $50,000 line of credit, or is it a $200,000 line of credit? What's going to really solve the problem? And then the background, obviously, the operator, can they run this business? Does their background match what they're currently doing? Or is there anything else that you're, looking for? Like what gets you excited when you look at an applicant and you're looking to give them like a business loan or loan for their business?
Yeah,
What
yeah,
what gets you
really.
most excited?
I love it when we can take somebody who had a job and they're going, they're making that, they're going out on their own and they're looking at employing people in the community. Are they creating jobs? Because then they're going to make money, they're going to grow money, they're going to create jobs, and that's a circle that really makes a strong credit union. And many times, for those people that are in that growth mode, they kind of, they've started up their business and now they're in a growth mode. It scares many people and it freaks people out. But to me, the best deal going today is a small business administration loan. It's a horrible thing to say, but it's the best government agency out there today.
Yeah.
They're friendlier than they ever been. You get the best terms, rates, conditions, to really make it. It's a little bit more paperwork, uh, but they've gotten way better at it, and it's really one of the best options out there. Rates, terms, conditions, getting you the money that you need to grow.
Okay. Interesting. Just digesting all this. So it's more of there really is an invested focused in the community, it sounds like, right? I
Oh,
mean, you guys, it's not all about the numbers. It's, are they supplying jobs to local members of the community? Who is the person themselves? What's their background? What's the opportunity? What do they really need? It sounds like it's really a more personalized approach. It's like banking, but
yeah,
like I'm talking about way more personalized. I mean, is that a great way to
yeah.
sum it up?
Yeah, and it's more. That's why if I went, I always say if I went to a commercial bank, I'd probably get fired in about a week.
Wow.
Um, just because it is that more personalized approach of getting to understand. And if you talk to anybody who maybe has their primary account at a credit union, when they walk into a branch, and occasionally people still walk into a branch these days, when you walk into a branch and need something, it's really a friendly culture of being able to help people and talk and what do you need, and we carry that same culture of the cooperative to small business owners.
Mhm. I understand. Let's pivot over towards doing some real estate stuff. What gets you excited about when you're looking at a particular real estate deal, aside from what a normal bank would look at? Is there
Yeah,
anything that would get you more excited about that real estate deal? Because it sounds like a lot of the underwriting is the same, right? You're looking at the same financials, but you guys are taking a little bit more personal approach. I'm guessing that if it's a real estate deal that's in that community of that credit union, it's impacting the community, that maybe because there's a little bit more personalization there and impact on the local community, that maybe there's a little bit more favorability, and
yeah.
is that fair to say?
Absolutely. And first, let me say, if you knock on my door and need 10 to $15 million for a real estate project, we love to talk with you. We love to help. But when you start going up the food chain a little bit more, it comes about the numbers as much as anything. You're a great person, but the numbers got to work when it comes to those
Yeah.
dollar amounts. And I believe, and there's an inherent lack of housing in this country.
Yeah.
And when somebody is putting on new units, we believe those units will get filled. And so we want to try to help bring housing. We want to help try to bring affordable housing. We want to help bring housing to neighborhoods that need it. You're in a boom area, and how many new apartment buildings are there? And we want to be part of that, and they all seem to get full.
Yeah.
And the same thing all across America, particularly all over the Southeast. I'm in Pennsylvania, and we have a lot of credit unions in Pennsylvania and New York and New Jersey, and U-Hauls tend to move one way. They move north to south. So we want to really make sure that there's housing, there's good housing, there's stable housing, there's safe housing in the community. And not everybody needs to be a homeowner, particularly when you're younger and the tax breaks aren't there like they used to. So we can really help people kind of bridge that gap in of the housing crisis in America. Today's challenge is, can you buy that? We know it's going to get filled, but either buying, building, or renovating, making sure that numbers covers and it's not a financial flop for you.
Mm. What are some of the terms and that you're seeing for, like loans from a credit union? Both if you're, I guess, borrowing money for your business and you're also getting financing for like a real estate deal.
Yeah, and the real estate deals, they tend to be most of the time on 5 to 7 year fix. In today's interest rate world, you usually can look at 5 year transactions with the amortization periods based between 20 to 30 years, depending on the age and condition of the property.
Okay.
And,
And
and
for
for Yeah, for a small business, we love to when people ask about rates, the answer is it's more than it was 2, 3 years ago.
yeah, everything's gone up.
Everything's gone up. But vehicles, you can still get the deals today in the 6% range. If you're looking at real estate deals, maybe in the 7% range, and keeping in mind, with these transactions today, if rates go down, you can refinance and take them down.
Mm. So aside from the personalization, because I'm trying to get to the meat of like the value add here, whether
Yeah.
you're borrowing money for your business or you're borrowing money to do a real estate deal, it sounds like the big value out here with credit unions, because again, the borrower just wants to be approved, right?
Yep.
It lies in the personalization, getting to know the borrower on a personal level and how that borrower aligns with the needs of the credit union, which it sounds like a big need of the credit union, which is set up as a nonprofit, is investing back into the community. So if it's a real estate deal, if it's a localized deal, checks the box there. If it is something that's going to impact the community in a big way, you mentioned, affordable housing, boom, it checks the box there. These are all things that would could potentially be the threshold that gets the borrower the loan that another local bank or maybe national bank would not do. Am I understanding that right?
Yeah, and in particular, I'll give you a good example of something you can relate to. If you're doing a deal in Williamson County, Tennessee, there's probably about 50 banks lined up to do it in the elite area of one of the elite and richest areas of this country. So we also lend in those areas and like to do that. If you're lending in 30, 40 miles outside in kind of a small town, you might get a you might get a condition from a local bank that says, "Oh, we really don't lend in that market." We're lending we our credit unions are part of those second and third tier communities along with the major metro areas.
Mhm.
So, you know, sometimes banks write a box and say, we like to lend in these towns, we like to lend in these markets. I lend to this type of property. My credit unions can have the flexibility to say, we're going to take everything and look at everything in kind of these swaths of America that maybe are a bit underserved.
Interesting. So your company does service a national market. Doesn't matter what state it's in, and it's a credit union based service program that you
Yeah,
guys offer.
we're doing deals in Scranton, Pennsylvania. We're doing deals in Orlando, Florida. The big cities, the small towns, where you can really get access to financing, where some other people might look away and say, that's not in my area. There's a credit union in that area that wants to cover and lend to those communities.
Gotcha. So you're working with the credit unions in those specific areas. So I bring you a deal in, Dixon County, for example,
Yep.
and say, hey, I'm interested. I've never worked with a credit union before. I'm interested in this, and I bring you one of our development deals. You'd probably reach out to one of the localized credit unions,
Yep.
get to know me on a personal level, get to know the development, how it's going to impact the community, and see what strings you can't pull to get that deal across the finish line and financed.
Exactly. And one of the things, and the average credit union is about 250 million in assets, which the profile compared to a commercial bank is a much smaller profile. But what the credit unions do through companies like us is basically they're cooperatives who cooperate together. So the credit union last year in our credit union network, we did about 450 million in loans, and we service a portfolio of about $2.6 billion. Much of that was shared within the credit union industry among one another. So they really collaborate and can lend much bigger than they are individually.
Okay. Makes a lot of sense. Yeah, this has been a learning experience. I like the idea of personalization as we get bigger and bigger and bigger, and there's more and more people. It's harder to get that personal touch, that connection, especially at a banking level, because you're never going in to actually, do any kind of banking anymore. Everything's online and it's all digital. So this has been really interesting. Are there any cons to working with a credit union? If I'm new and I'm either a business owner or I'm looking at financing for one of my real estate deals, is there anything we've gone over kind of the
Yeah,
advantages? Is there any like cons that stand out?
yeah. If you're what I'll call a middle market business, where you start where you might not necessarily have an owner or just a couple owners, and it's more of a larger, complex type of organization,
I
where
see.
you can't say that's not too much of a credit union type of transaction. And I think the other piece is sometimes credit unions we may struggle a little bit with large ground up constructions. We do some, but it's not, so I would say it's not our strength. So many times we're working with a construction lender and then take them out.
When you say large ground up developments, like I've got a 74 home development that we're developing, the pads, and we'll be selling them to a builder. I've also got another where we're building like 20 homes. How does that compare?
Yeah, yeah. 20 homes is probably right up of our line. If you get into several hundred units, that's probably not us. If you get into a 300 or 400 unit apartment complex, that's probably be right on the edge. And most of the time those are going to the agencies today. So we're kind of that middle ground of, you're not going to the agency transactions for some of those. Those are always, your top tier rates in terms. So
Okay, cool. Well, that's good to know. Well, we're about out of time here. For those that want to learn more about you, learn more about your business, or just want to see if, man, they can't get some money from some credit unions, how can they get in touch with you and find you?
yeah, sure. Our website is mbfs.org, O-R-G. You connect with us on Member Business Financial Services, or me, Mark Ritter. And what we really like to do is we have credit unions nationwide, but if we don't have somebody specifically in your marketplace, we have friends and relationships with other companies like us, and we make an introduction and get you somebody with somebody who's lending in your market.
Cool. Mark, I appreciate you coming on today. It's been a pleasure.
Brandon, I enjoyed it. Thanks.